right, we want to stay with this subject for a moment. Let's bring in Ashok Kumar, Managing Director at Northeast Securities. Ashok, let me ask you, so Julie, breaking down those Dell earnings, what do you think of the release?
Yeah, Carol, I think overall results were slightly better than expectations, but I think the near-term driver for the stock on the upside will primarily be the direction of gross margins, which I think will be under pressure near-term, as Julie indicated, primarily due to increased competition from the likes of Acer and to a lesser degree Hewlett-Packard.
I mean, the gross margin right now, Ashok, is what, 16.6%? I think Julie broke that down. I mean, where do you think, this is where it stays for a while?
Yes, I think that's where the disappointment was. I think the street was expecting 18% or higher. And we think there are two issues at play here. One is increased price competition and higher component costs. And those two headwinds will likely impact margins or profitability near term.
And the trend not good, because last quarter it was, what, 17.3%, so now it's down to 16.6%. You expect it to even continue to be under pressure, as you said, and go even lower from here?
Yes, I think the company is trying to find the right balance between market share and profitability. They're already trading or trailing Hewlett-Packard in terms of market share, and we think that trend will likely continue near term.
Ashok, what about this attempt by Dell to try and become more reliant on the services business, buying Perot solutions? Do you think that it's going to be successful, and is that going to help the bottom line?
I think they have to. I think they're more reactive in this sphere, but longer term, I think they should be well positioned to capture some of the cloud service opportunity, because the demand is being driven on the hardware side by storage and servers. And of course, from Hewlett-Packard's perspective, I think what is lifting their performance is the increased reliance on services and software, which is also benefiting the bigger players like IBM.
Hey, what about the move into smartphones? I mean, does that make sense to you, or are there too many people moving in? Obviously, everybody wants to get a piece of this, but there's so many players already vying for market share there.
Absolutely. I think that's a very critical question. We think the market is very crowded. The first among equals there is Apple today. And in terms of rounding out the opportunity, you have RIM and, of course, Google with the Nexus 1. And we also hear that Microsoft will roll out their own branded phones, sometime next year. So it's unclear whether Dell will be able to get the mind share at the carriers, which is critical to get sponsorship for their platform.
In the statement, the CFO, Brian Gladden, says that $3.9 billion worth of cash flow from operations was generated. Are you comfortable with that level, and how do you think Dell's going to put that cash to work?
Yeah, I think the velocity is coming back, not to the levels where it was at its peak, but it's definitely in the right direction. In terms of where they're going to put it to use, I think more recently they acquired Case Networks, which augments Perot systems, again, increasing the push, as Julie indicated, towards more solutions and software. I think that will essentially position them for this cloud service opportunity down the road.
Ashok, so what do you do with the stock here? I mean, it's had a nice run over the last 12 months, like a lot of other names, up 65%. What do you think here?
I think the street has about a $1.20 number for this year. So based on those numbers, I think the stock is fairly valued here. So maybe a near-term trading range, and a slight pullback, I think the risk-reward becomes more attractive.
All right, we're going to leave it there. Hey, Ashok, thank you so much. We appreciate you finding some time to kind of break down this release with us. Ashok Kumar joining us on Dell.